Good afternoon, everybody. Thanks, Adam, for the introduction. And obviously, like he mentioned, futures and obviously multi-asset trading is a growing thing. We're seeing a lot of it with brokers, obviously. We've seen in South Africa, in the South African market, we have companies like Easy Equities offering fractional shares, while we also have a lot of trader interest growing in futures and multi-asset as well. Obviously, the diversification aspect, which is a big part of our discussion today, is something we will touch on as well. But firstly, before we get into that, I think I'd like everybody on the panel to introduce themselves and talk a little bit about what they do and where they are based, as well as their companies as well. So if we can start firstly with Moonika, I believe it is, and I'll let her take it away.
Thank you, Zain. Sorry that I sound like this. I'm just recovering from a little bit of cold. My name is Moonika Jurgenfeldt. I represent Equiti Group. I am currently employed as commercial head for the Africa region for Equiti. I think just to add here, I have been in the industry for close to 16 years, so it has been very interesting to see firsthand how the traders are changing, how the brokers are changing, and I'm very excited to speak, I think, a big next chapter for the industry, which is multi-asset. Thank you, Zain.
Sure. Next up, obviously, we have Zihaad. He'll introduce himself there, country head of CFI South Africa. I'm sure he can give you guys more information there.
Great stuff. Thanks very much, Zain. So I am Zihaad, Israfil, country head for CFI Financial. Recently launched in South Africa towards the end of last year. However, we've been in the industry for about 26, 27 years out in the Middle East. CFTe brokerage. Myself, I've been in the industry for almost close to 2 decades. That's probably giving my age away. But excited to be talking on this very exciting topic today. Thank you.
Okay, next on the panel we have Tammy de Costa. Tammy has been an analyst at IG, Daily FX previously, and currently working at FX Street as an analyst as well. I'm sure she can give more information as well on her side.
Hi everyone, I'm excited to be here. As Zain said, my name is Tammy de Costa. So my career actually started in fundamental analysis in economics, and I've now studied technical analysis as well. I've got a passion for commodity markets, and I think markets as a whole, especially futures, I think there's lots of opportunities, and I'm excited to discuss it all with you today.
Sure. Lastly on the panel, everybody, we have James Bruce. James is a friend, a trader as well, a full-time professional trader, and somebody who I've been following for quite a while. I'm sure he will provide more insights on the panel and give himself an introduction as well over there.
Yeah, well, my introduction's not as exciting like that. I'm a full-time trader. I've been doing it for the last 8 years for myself, and I trade a variety of markets, namely stocks, stock indexes, and currencies. That's me.
Yeah. Okay, so with that in mind, obviously we have quite an interesting panel, guys, but I think the first question I really wanted to touch on today is something for Moonika in particular here, and maybe Zihaad as well can weigh in on this. I was just wondering for them, we have had talks earlier, just before this, there was a big talk on regulation and how that affects obviously financial markets and our participation in these markets. But I was wondering from Moonika how she finds the regulatory aspect here in Africa compared to the Middle East as well, and if she has seen any differences and any changes, or what the landscape is like for her from her personal experience.
Thank you, Zain. That's a really good question. So from an equity perspective, we don't have a license in South Africa, and we are fully licensed in Kenya. But let me tell you, I'm coming to South Africa for work probably twice a year, and it's always a very interesting market for me. But then one would ask why we don't have a license yet, right? Over the years, I think since COVID started, the regulatory landscape in South Africa has been quite erratic. We see quite few changes happening in regulation in South Africa in quite short notice. So from a brokerage perspective, who already does not have a license in South Africa, it might be quite hard to convince shareholders to invest into a region that sees quite an erratic change in a regulatory landscape. But it is a very similar case scenario, for example, in Kenya, where we do hold a regulation. Perhaps we don't see as erratic changes as we do in South Africa. But let's be honest, I still feel that the African regulators are catching up with regulators in Middle East, and I mean, let's not even go to Europe yet, right? But we are still catching up a little bit. Probably the understanding of how the markets work, how the brokerage work is still lacking. Maybe more so from Kenya side than in South Africa. Whilst, for example, in comparison to Middle East or for example, in UAE, where we are fully licensed as well, the regulation is set to the smallest of details. So when you get regulated, it's very clear for you what you have to do and what you don't have to do. There is not really so many gray areas, right? So regulation is stipulated in a much clearer manner than what we see in Africa.
Yeah, just a follow-up on that. Something I wanted to know from James. James, from a trader's perspective, have you seen a lot of changes in the regulatory aspect in South Africa in particular? And do you use a lot of locally based brokers, or is it more an international, or is it a mix of different brokers, if you can enlighten us?
So I work with a lot of Americans. Well, obviously futures is under one body underneath the CME, right, in Chicago. So with the downfall of a few of these prop firms, which you heard about here this week as well, a lot of guys have moved over to trading of futures simply because from a regulatory aspect in America, it's better. It's more, CFDs are quite hard to get, regulated in America. I do believe, from my understanding, OANDA is one of the only ones that do have the CFD license there. So the guys that I trade with and work with on an everyday basis that are all based in America, they've actually gone away from trading CFDs to trading futures simply because of the regulatory aspect. And just something to touch on that as well, one of the big differences between, I personally still trade CFDs because you can trade the NASDAQ, S&P 500, the Dow Jones, everything like that, still under these CFD brokers. But one of the big aspects is with futures, you actually have one pricing. So, for example, if you're trading on XM markets, right, compared to XNES, they might have different prices for the NASDAQ compared to futures markets. If you're trading the micros or minis, they are all one price because it's all regulated under one exchange. So that's been the big thing for the American guys moving over to futures from my experience and seeing the guys doing that. But for me personally, because I'm based in the KZN, I live in Belito, I still trade with CFD brokers.
Okay, interesting, James. On that note, Zihaad, I was wondering if you can enlighten me a little bit. Now that CFI have entered the South African market, do you see more interest in futures? Do you see more interest in, or is there demand amongst retail traders for multi-asset platforms and, traders looking at other asset classes as well and diversification, I suppose?
Interesting question. Zain, what we've certainly seen in the past few years, there's definitely been a change in the retail landscape, right? Traders today, I'd say, they are far more informed, and they are more curious. In terms of age, in terms of background. We're also finding that a lot of them are wanting to access a wider range of products. In indices, futures, crypto, of course, through name but a few. And that's why I think a multi-asset platform like what we offer at CFI has certainly become more appealing. Clients don't want to be boxed into one asset class, and this way, they want to have the freedom to be able to explore and to diversify all on one single platform.
Yeah, well, I think, diversification is important if we think of markets in the current climate. I'm sure, more traders would obviously love to get their exposure up across a wide range of assets. But on that front, Moonika, I think the big question I have here around Equiti Group, it's something I've been following Equiti Group for quite a long time. Now, with Equiti Group, I noticed education has been a very big thing for you, for the group as well, in Middle East as well. I know it was a very big thing. I know you guys have a massive team. Now, how have you found the difference between, let's say, the Middle Eastern traders and traders in Africa, like the education differences? Do you have to tailor your education solutions differently when you're approaching the African market, or do you guys keep the approach kind of similar?
That's a really good question. I mean, first and foremost, let's take the fact that an average account size of a Middle East trader is significantly bigger than an African trader. That's a fact, right? And automatically it benefits the Middle Eastern trader because they have more free margin. They can see through some of the market swings that an average African trader can't, right? What we have concentrated a lot more in an African aspect is a wider financial literacy aspect. Not so much in Middle East. Middle East, our sessions are very technical, very strategy orientated, while in Africa we do a lot more work when it comes to broader financial literacy. Because if you look at it more holistically, an average trader also has a side business, also is trying to set up 3 other businesses at the same time in Africa. So what we want to do as a broker is not offer value only from the trading perspective, but what we want to see is an individual who uses us as a broker succeed in life in general. So that has been our angle. So we have not only doing master classes, we have done really, really successful financial literacy workshops across East Africa. Would love to get to South Africa one day as well, so touch wood, maybe one day we are here. We've set up really successful podcasts, once again, speaking about the broader financial literacy. And it's not only about CFTe and multi-asset trading, it's about investing in general, entrepreneurship, budgeting, saving, and so forth. So we do try to cover all aspects about personal finance and also investing thereof.
No, that's interesting. Look, I think education is a big thing for the continent as well. I think something really needs to, we have seen a lot of changes in that aspect over the years, but I still think there's a lot in terms of, especially when it comes to multi-assets, I still think there's a lot of things that, we still need to brush up on. And like I say, Equiti Group has been something that definitely done a lot of work, especially in Kenya. I know I've seen some of the work you guys have done there, so I've always been interested in the differences between the two. But Tammy, just from your perspective, like I know we worked together at IG previously, what have you seen with retail traders, even institutional traders, from an aspect of understanding multiple products? Do you think there is this lack of understanding amongst the majority in South Africa especially? I mean, Moonika touched a lot more on Africa. Do you think that there is still a lot of, or a big scope in terms of educating clients a lot more here in South Africa in terms of multi-assets, ETFs, all of these kind of things as well? Or is there a high demand as well for education in those aspects, or not so much?
I think there definitely is a demand. I think a lot of people, a lot of new beginner traders enter the markets with a bit of naivety. They think, okay, cool, I can, especially with CFDs or even with futures, they see that it has a potential of making, large sums of money in a very quick period of time. And that's not the full picture. I do think as well that, especially with the transition and now the regulatory aspect coming into sight, I think it does give a lot of opportunity for proper brokers, to actually provide that information. And now you've got a lot more information readily available on the internet and so forth, but it still needs to be put into the right context. And I think that's where there's a lot of lack in clarity. And we still, especially as Africa, we do have a lot of catching up to do.
But just one more thing, Tammy, from your side. I know you are a certified technician as well, so technical analysis is a big thing for you. If you, as a trader, were trading futures and different asset classes, do you rely a lot on technical analysis? Do you change your approach at all? I'm sure a lot of traders would like to know if they're analyzing different things, futures. Do they change their approach? Is it something that you do yourself, or do you follow similar principles, similar rules as you would, for example, if you're analyzing normal Forex pairs or anything like that? Would you change your approach at all, or would you try and keep things as
I think, like James said, the one thing about futures is that there's one price.
Right.
So I still do, even if it's for a CFD broker or whatever, I still refer back to the futures price. Because there you know that, okay, fine, there's a lot more detail in terms of we trading on one price, and to me that sets the precedent of what other prices should be doing. As I said as well, I started with fundamentals, studied economics, and then it was actually my biggest trading mistake that pushed me to technical analysis, because the fundamentals didn't necessarily reflect what the price action was doing.
Yeah.
And then I realized that there's also the psychological aspects of trading, which then is incorporated in the technical analysis a lot quicker than usually fundamentals play out. So that's where I started incorporating technical analysis. And I will be honest, I do actually use technicals as my point of reference, especially for using my price setups and supports and resistance. And then you will find that fundamentals also fall into place, especially with big news events and everything. But especially with futures, those are incorporated first.
No, interesting, Tammy. Tell me, Tammy, at the moment with the current market conditions that we're seeing, I know everybody's talking, we're speaking a lot about fundamentals here as well, but now with the technicals especially, if you're looking at a longer term trading with, even if it's, futures and so on, with what we're seeing at the moment, comments having the potential to move markets and change the entire perception basically and, sentiment of traders longer term, like, is there any changes there or any advice maybe you can give, the audience here or traders in particular something to mitigate that or, besides obviously the normal risk management that we all talk about, is there anything else that you could share?
Well, I think you worked with me long enough to know I'm very much for multiple time frame analysis.
Sure.
And you will see, like, even with my analysis, I'll always start from a monthly chart and then I'll work my way down. Because a lot of the times, like they say, don't fight the trend. And you'll see the fundamentals land up being incorporated in the long-term trend. So we'll have a lot of divergence and things like that on intraday moves and things like that. But if you look at the long-term trend, you can see that there are clear technicals and fundamentals that then come into play. We've seen it in the futures markets recently with, for example, Trump. We see it. So I mean, with commodities, I do use commodities as a very big gauge for risk sentiment and everything. And I feel that the long-term charts definitely give a better gauge of what's happening, especially in terms of risk sentiment and risk aversion.
True. Okay, no, that's quite informative. Thanks, Tammy. James, tell me something now. I know you deal a lot with traders from all around the world, right? I've watched your streams, ASFX TV. I've seen you do personal streams. The differences between traders. I know South Africans now, we've been touching on this for a while. How do you find the differences, traders? Do South Africans, are South Africans more technical traders? Do we focus more on fundamentals? You personally, what do you put stock into?
Yeah, so on that, I think you got to find what works for you, right? I've been doing this 8 years, and you just got to find what works for you. What works for me might not work for Tammy, and vice versa. On that, by the way, just a tip there as well. Just trade with a stop loss. I think it was last week Friday. I think Trump came out, said he's going to tariff EU, and the DAX dropped 400 points. So trading with no stop loss is just a recipe for disaster. So that's But everything works for someone. Nothing works all the time. Market conditions change. Maybe trading with the trend might be working really, really nice 1 month, and then next month Trump comes out and tweets something and it completely goes against you. So I think just finding what works for you. I mean, I've worked with, as I said, traders from all across the world. I've never seen some of the futures traders enter so many positions on any given day. Something also with futures is that compared to the CFTe brokers, is the fees are a lot less. So you can enter 50 trades in a day, and the swap, the commissions are very, very minimal. I mean, some of the guys are micro scalping for like 10 seconds. So I think, again, with your trading, I think keep it simple. That's what I try to do my own trading, and find what works for you and stick to that. And then you get bigger and scale up that way. That's what I've been doing with my trading. It's what's worked for me. Might not work for you, but find something, keep it simple, and stick with that.
No, makes a lot of sense. But you and I were talking about this as well, James, the diversification aspect. Now, I know you trade, obviously, a lot of futures. You trade CFDs. You do some prop trading as well. When you're looking to diversify, like what do you do in terms of keeping your products or keeping your portfolio diversified? Like, what do you focus on mostly?
Yeah, I have different accounts for different goals. I might have a long-term account that I'm looking to do, anywhere from 2% plus a month. Which is great. Long term, you're going to beat the S&P doing 20% a year. You might have other accounts that you're looking to be more aggressive on. And obviously, those accounts I'm going to be trading, with less capital. So, having a plan, and then for each account, one account I might trade stocks on, another account I might trade futures on, another account I might trade currency pairs on. So having different accounts for different goals and then sticking to that plan. But I think that is the beautiful thing of trading. There's so many different things to trade these days. I mean, 25 years ago, it was quite tough to go to a broker and get it for so cheap. You might have had to call them over the phone, So Yeah, so having different accounts for different goals is definitely something that I incorporated in my own trading a couple of years ago, and it's been doing really well for me and what I like to do with the markets. Also, with multi-asset trading and finding different things, currencies might be moving 1 month or 1 year, and then it might dry up. Like in COVID, currency pairs were moving, pound dollar was moving 200 pips on an average day, but the next year it might drop and it might be moving 40 points on an average day. So you might have to go over to trading stock indexes or Bitcoin or whatever it is. So yeah, having different accounts for different purposes is something that I think has boded well for me.
I think the challenges of being a professional trader. Okay, just on that note, I think something else that I wanted to touch on, I think this is for everyone on the panel. I think let's start with Moonika first. Technology. The changes we're seeing at the moment, AI, a lot of guys developing strategies using AI and so on. Is this having any effect from a broker perspective, or are the brokers themselves using AI a lot in terms of any aspects within the brokerage?
Yeah, that's a really good question. I think majority of us, we have incorporated AI into our back office operations already. For example, simple as client live chats or Q&A sessions. I think we can use, simplest way, we can use AI there, and I believe majority of the brokers already have. But other than that, it's even more important, how can broker utilize and develop AI to help our traders, right? And there's several brokers and providers who are working very aggressively and have already delivered different trading-related AI bots and so forth. So I think in the next 6 months to 1.5 years, we will be seeing some amazing improvements in the brokerage technology, both internally utilized for back office operations, etc., but also tools what we can offer to traders that can support that multi-asset trading and strategies and risk management, etc. So I think it will be very, very exciting 1 year, 2 years ahead.
Yeah, well, yeah, personally, I've used quite a bit of AI within writing, market analysis. It helps streamline the process.
And it works, right?
It does. It does help a lot, especially when you're writing on generic topics. There is a lot of things that you can use AI for without copying anybody else's work, or just finding tweaks to your own work that helps word things better, I think, for depending on the audience which you're trying to reach. Zihaad, from CFI's perspective, anything that CFI uses when it comes to AI technology, any changes there that you guys are looking ahead to or looking forward to implementing in the near future?
From the perspective of CFI, AI is something new to us, but we're looking to incorporate it into our education. Education is a core part of our offerings at CFI. We don't just give clients a platform and expect them to figure it out on their own. So for us, AI is it's something that we are certainly looking at, and we'll certainly be seeing more of it in the not too distant future with regards to our education itself.
Right. Tammy, your experiences so far, anything AI or?
So the one thing I think that I would warn with AI is, I think we need to, personally, AI doesn't actually adjust for the psychological aspect just yet. So like when James said, when Trump tweets something, and he's a very big, not on Twitter or X, but on Truth Social, he's been posting a lot and it moves markets. And that's because it creates fear and everything like that. AI doesn't necessarily pick that up just yet. So I think, traders do need to be vigilant about that aspect. So I do think it's got its place, and I do think there's a lot of potential for it. But I think, if you're doing or trading with an AI bot, and you're going to say, okay, trigger it here and there, and then there's something like a Trump social media post that creates fear, then you need to realize that volatility, it's going to mess things up, or it's got the potential to. So I think that's my caution. As I said, I do think AI's got a lot of potential. I just don't think we're there just as yet.
Okay, interesting, Tammy. James, tell me something. Trading perspective.
I can tell you a lot of things. Yeah.
You can tell me a lot, I know that. But now from a trading perspective, how do you any AI at all in your strategies? You see it with some of the clients you spend time with, that you teach, discuss trading with. Are they adopting AI, or is it more neither here nor there at the moment? What
Yeah,
are we
personally
looking
for me and the guys that I'm working with, I think AI definitely has its place. But I think for me, there's nothing better than the human brain. We can react more in real time, to what's actually happening around us. For example, the Trump tweeting or whatever it is, whatever is happening in the markets in real time. If you've built a bot or whatever that trades using AI, it can't factor that stuff into account. So I think for me, I'm a big advocate of discretional trading. It's what I do and what I advocate for. But if you want to use AI and that sort of thing, I think there is a purpose for it. But yeah, for me, I'm a big advocate for discretional trading.
Yeah, no, I know it's something we have in common, James. I think a lot of people overlook like you say, the discretionary aspect of trading, especially when you're trading for quite a while. A lot of people tell you, trading, follow the rules, A, B, C, D, E, but the thing is, it's not the data that actually trades markets, it's individuals, right? So, I mean, people drive the markets, people trade the markets. So sometimes it's why we always say sentiment doesn't always match up to what the data is telling us. I mean, that's why we had the 2008 global financial crisis in a way, is that nobody believed it was coming, even though the data said it was coming, because emotions got the better of people, I suppose. But yeah, look, I think AI is going to be interesting moving forward, but we'll have to see how that develops moving forward. But when it comes to futures trading, I think moving forward, do you think we're going to see a lot more adoption of futures? South Africa, internationally, multi-assets as well, a lot more people looking for these products? Or do you think it's just now at the moment, because we're seeing higher volatility, we're seeing a lot more uncertainty globally, markets, politically speaking, a lot of uncertainty, people are unsure, trade deals, all of these things. Do you think that this will continue, this demand for more, multi-asset trading, more products, these kind of things from the retail traders in particular?
Yeah, it's going to be quite interesting. Obviously, there's that saying that says, when America gets the cold, when America sneezes, everyone gets the cold, right? So it's quite weird how when something happens in America, people adopt it all across the world. So I think there definitely has been a higher demand. I mean, every single day I'm getting asked, when are you trading futures? When are you trading futures on an actual futures broker? And I'm like, there's no real brokers in South Africa that actually offer futures regulated trading. So it is going to be interesting to see what South Africa does and if we adopt that more. But, I mean, no one can tell, right? Just like the markets. No one knows what's going to happen next. You just got to, I'm going to ride with the trend. If futures is the way to go, then I've got to, drop my ego and say, let me go trade futures with the Americans. So let's see.
It's changing, definitely changing. Moonika, from Equiti Group's point of view, looking ahead, next 5 years, what are you guys seeing as, the main things, main changes from futures trading, multi-asset trading? I know you said hopefully Equiti Group will come to South Africa at some point as well. We hope so. We'd like to have you guys here. So with that in mind, are there any particular products that Equiti Group, maybe not for South Africa right now, obviously because you're not here, but in your main markets, are there any new products that Equiti Group is looking to bring to market soon, or something that traders can be excited about, especially when it comes to diversification in these aspects?
So as long as we are referring to like a real multi-asset and away from the CFTe offering, I mean, from a broker's and the business perspective, market directs us, right? Of course, even in the CFTe futures, we have seen increased volatility and increased trading activity, but that is mainly linked to the current market condition. In Europe, in the US, everything what James said is 100% true, right? Do we actually have a demand for futures in Africa? Questionable, highly questionable. And that's for a few reasons. Education is definitely one, what we discussed already. Higher margin requirements, and a few others, right? Accessibility and so forth. And that's definitely one of the reasons why I think in entire Africa, I don't think we have a futures provider. I don't think there is any.
I don't believe so. No.
I don't think so. Yeah. And I think it's gonna be challenging. In a 5 years time, I'm quite sure there might be happening something, but I think it's, especially in the African context, it's still too virgin. It's still too virgin market for us.
Yeah.
Yeah.
Okay. Oh, interesting. Zihaad, last one for you. CFI. A year now, like you said, over 20 years in financial markets already, mostly the Middle Eastern side. now into South Africa. What's the plans? What's the next 12 months to 24 months looking like from your side? What do you wish to bring to market for South Africans?
You know, we would like to carry on the trend of what we've established out in the Middle East. We've been in the Middle East for about 26, 27 years, and we've really monopolized the markets, I'm very glad to say. It's important to understand that CFI itself is a multi-asset platform, you know, and as a new entrant to a very challenging market in South Africa, we want to eventually become one of the market leaders, but we're going to be taking it very slow. We're going to be crawling before we run, before we walk. So for us, it's about feeling the market out, see what's needed, and then of course react to that.
No, interesting. Well, we wish CFI the best on that front, hopefully. But let's move on to next. Tammy, from your side, work-wise. I know you write mostly about, you know, markets most of the time these days, but what do you see futures looking like in the next 5 years? Do you think we're going to see an improved demand, especially in Africa? Or is it going to be a case of, like Moonika said, you know, we're still in the early days, the next 5 years? What do you think it's going to be like looking ahead?
As I said, I think Africa in the trading realm still has a lot of catching up to do. I think the regulations or financial regulations, we do actually have a very strong financial regulatory system, but there are inherent risks. And with futures trading, I think that there's going to be a lot of headwinds that are going to pose like quite a big challenge to financial regulators. I do think that over time there's definitely potential. And it could open like a lot of opportunities. But if we look at, for example, CFDs, if I asked you 10 years ago about CFDs, not many people offered it to South Africans, and there wasn't a lot of demand because people didn't know about it. So I think if, you know, education, and we see even with AI, the technology and innovations are getting progressively quicker, and I think that could open the door. But I don't think even in the next 5 years, if things had to stay the way they are now, I still wouldn't be too, you know, too sure about it.
Okay, interesting. James?
Yeah, from my side of things as an independent trader, I'm just going to stick with what's working. If futures becomes big in Africa, then I've got to pivot to that. I've got to go to where I'm making my money. So, I'm rather going to react instead of, try and pick if futures are going to become the thing or whatever. I'm going to stick with what's working, what's making me money. And if it's futures, then I'll jump on board. Yeah.
We go where the money is.
Yeah, exactly.
Okay, I get that. Okay. I think we got a few minutes left, guys. I wanted to know if there is any questions, anybody would like to know anything about futures, multi-asset trading, portfolio diversification. Like I say, James is an expert on that. Tammy can speak to that as well. From a broker's perspective, anybody have any questions for Moonika or Zihaad? Yes, sir. Oof, we get. Anybody have a mic? Nothing. Sorry, Adam. The gentleman in front.
Thank you. I have just a quick one. I'm someone who loves to learn, and I can see that your presentation is on another level. So the question that I have directly to the traders, number one, I believe that to identify a best trader would be someone who knows how to diversify the risk, and that's where you can say that that individual is a best trader because he has a unique, or he has strategies of how to diversify. Either you are using a risk parity, or you are using risk budgeting, but by all means you try to minimize the risk. I know our focus, if we are traders, is to make returns, of which a return is something that came if you really have those strategies that are in place where you can see where are the trading opportunities and be able again how to minimize the risk. So my question is, how to mimic the index, number one. Number two, how to see that there is a risk in these trades and how to diversify the risk. What strategies that are you using to diversify the risk? Is either you are using the risk parity or the risk budgeting, or what other strategies as a trader that we are using to see that there's this trade, there's this opportunities in the market, but how can I diversify the risk? Because I know that all of the traders, they are there to make returns, they are there to make big money, but there's one component that we're missing, how to diversify the risk. And the best trader is someone who knows how to diversify the risk and make it a point that whatever that is happening in the market, but there is a minimum risk. Number one. Number two, when you construct your portfolio, are you single stock portfolio or multi portfolio stocks? And how you in your portfolio construction, how you pick up what are the fundamentals strategies that you are using to pick up the stocks to make your portfolio that will, in the long run, consistently beat the benchmark or either beat the inflation, maybe in 5 to 10 years to come. And you know that if you create or if you construct this portfolio, you are very sure that using this alpha is a returns. I know that in 20 years' time from now, I know a lot of PMs and the traders or dealers, they are using what we call a portfolio theory model. But someone was talking about the AI, new strategies, where we talk about the risk parities, where we talk about the alphas, overlays, where we talk about, you can mention many, but in your portfolio construction, how do you construct your portfolio that will beat the market, the benchmark, maybe in 5 to 10 years' time? Thank you.
Okay. James, you want to take the first question there?
Yeah, sure. So for me, in terms of you talking about portfolio from a long-term perspective, naturally, so I day trade, right, for a living. So day trading is inherently more risky than building a long-term portfolio, right? So for my long-term portfolio, I keep things simple. I diversify my risk. You asked about diversifying risk. I put it into different ETF bundles. I take money that I make from my day trading, which is obviously more riskier than long-term investing, and I put it into different ETF bundles. In terms of individual stocks, I keep it simple. I only look to buy stocks above the 200-day moving average. That's what I do. Is it going to beat inflation? I don't know. That's what I do with my long-term portfolio. But in terms of diversifying risk from a day trading perspective, I think you're asking that as well. When you enter a trade, know where you want to get out and what the risk is. Simple as that. Know what you're prepared to lose when you get in.
Okay, thank you, James. Tell me a quick one on what he said about portfolio construction and building a portfolio with your background. Any tips in terms of, picking stocks in particular? Like if we're looking at it from a fundamental and a macroeconomic point of view, how would you, if I had to give you money and I said, Tammy, build me a portfolio now, how would you diversify that risk? Across what sectors? How would you pick?
I'm actually talking about this tomorrow, so I'm going to give some away.
Give him a little bit. Give him a sneak peek at least. That was about a sneak peek.
Okay, so to sum it up, the way I see it is if you look at our economic situation in Africa specifically, we can see over time GDP, like the fundamentals haven't been great. But if we look at the JSE 40, the benchmark, it's still been outperforming, and it still has been outperforming inflation. Why? Because it represents the 40 biggest stocks and biggest companies in South Africa. Okay? Now, if we take that same thinking and we look at the stocks that have been performing, for example, when we see economic shifts, we can see sector analysis and industry analysis, which isn't necessarily studying each individual company. But for example, last year we saw growth stocks outperforming. This year we've seen a dramatic shift, and we've seen gold companies and so forth that are performing better. So just with regards to that, we've seen a shift from growth to defensive stocks. So I think the broader fundamentals, or if you're just looking, instead of just looking at individual stocks and trying to guess, okay, what's going to outperform, especially for a beginner or somebody not, that's hasn't necessarily studied it in detail, I would say just use benchmark indices. Just start from there. It's giving you a broad overview of the country and what stocks are actually have the most impact on the economy, and go from there. So if for example, Naspers has been doing really well, but and for example, healthcare does really well. So you have to look at those sectors, and from there, then as James said, then you can go to the individual stocks and see what's trading above the moving averages, the 200 for a longer term perspective. If you're wanting to do shorter term, look at daily charts, things like that. So there's definitely a way that you can take a step back, look at the broader economic perspective, and then use technicals or whatever to hone in depending on your time frame.
Zain, if I can actually just,
Sure.
if I could just touch on the topic of diversification. It's important to note that diversification is more than just a buzzword, right? It's a strategy. If a trader is exposed to more than one asset class, they're quite vulnerable to sudden shifts in the markets, right? So if you are trading futures, you're trading multi-assets, you can explore different market cycles, because of course you can hedge. So for example, someone trading equities, for that matter, might want to hedge that exposure with index futures or equities or with commodities for that matter. So it's about really using the tools at your disposal to build a more resilient portfolio. That's what I would say with regards to diversification.
Yeah, I think that's an interesting point Zihaad made. If you have a lot of exposure on equities, commodities, especially this year, if you look at what's been happening, if you had money in both equities and commodities, good diversification strategy would have at least yielded some return so far this year. But unfortunately, that's all we have time for at the moment, ladies and gentlemen. I'd like to thank everyone on the panel. I'm sure if you have any questions for the individuals, they're still probably going to be around here and they'll be able to touch on some of that. But yeah, we really appreciate everybody attending. And as Tammy said, she will be talking on some of this tomorrow as well. So please come and join and catch her tomorrow for that as well.
Thank you so much, Zain.
Thank you, Zain.